Buyers are on strike. It's hard to tell if it's a seller's or buyer's market. Of course, it depends on what area of the country you're in. And we just hit a record of $700 billion in listings. What does it all mean? So Inman published a recent article, and the title of the article is Record $700 billion worth of listings on market, but sales are sluggish. And they are sluggish. We all feel that. And what's interesting here, and here's some of the key data, and then we're going to get some insights. Total listings are up 20% year over year, and they're up pretty high the previous year. So we really have a ton more listings. New listings, which is probably a more forward-looking indicator, rose 8.6%, hitting a 3-year high. And understand the total listings are how many listings are in the market. New listings are how many listings are coming to the market every month. 8.6% by a 3-year high historically isn't a lot. It's still low. There are nearly 500,000 more sellers than buyers, which we talked about earlier this week. Now, the median days on the market is now 40 days, 5 days longer than last year. But here's what's crazy. When I came into the business, now 25, 30 years ago, I was taught that a neutral market, it takes 6 months to sell a house, or 180 days. That's a neutral market. And if it took longer than 180 days, then that was a buyer's market. And if it took less than 180 days, that was a seller's market. But today, when the average days on the market is 40 days, we believe we're somehow coming to the conclusion that it must be a buyer's market. And I'm not so certain of that, although there are certainly pockets of being a buyer's market. And then, in fact, 44% of homes are sitting unsold for 60 days or more, and that's considered stale inventory in today's world. It used to be stale inventory at 6 months. It's just amazing the way the market dynamics have changed and the speed of the market has changed. If you look at the stale inventory, that inventory listed for more than 60 days, it represents about half of the overall total listings, or about $331 billion. And yet, even with all this, the median home sales price is up 1.4% year over year. And so here's the deal. The problem isn't that there's too much inventory. The problem is that it's not even the problem is that there's too few buyers. There's just too few buyers willing to take action. And of course, the answer is obvious why. Affordability is stretched super thin. Mortgage rates are, right around 7%. Sellers are not yet motivated to cut their prices, and then there's a massive amount of uncertainty out there, whether it's political or economic, and all that's leading to a totally frozen market. Now, the way that this problem gets fixed is, one, sellers start to loosen up on their prices and start to bring prices down, just like we talked about in the commercial real estate side of the business. In commercial real estate, sellers are having to bring their prices down on those tier 2 type buildings, class B buildings, I should say. They've had to drop their prices by 50% to sell their homes. Now, we're not going to need to do that on the residential side, but certainly 5-10% down it may take to actually unfreeze the market. And right now, sellers just aren't that motivated. They're sitting on low interest rates. They don't really care. They're sitting on a ton of equity. They could do home equity products to extract some of that equity, so they may not be willing to cut their prices. The second thing, of course, is if interest rates drop. Now, I know there's a lot of controversy over this, and I've been very bearish on whether interest rates will drop or not, believing that they're probably at where interest rates are going to stay. And if anything, there's upward pressure on them. Now, I, of course, could be wrong because anything can happen. But certainly they seem to be sticky in that, higher for longer is much longer than we all expected. And so I don't know if we should expect for interest rates to come and save us. And then the third thing, though, that can save us, that is saving us, is potential buyers can make more money. And we saw in the recent jobs report, I think it showed that year-over-year income wages had increased over 4%. And so that's super positive. So if the prices of houses remain flat, but potential buyer income increases, then that starts to shrink the affordability problem. And so certainly raising incomes are going to be the number one solution. And then it'll take sellers to get off the stump and start to cut prices. And then hopefully at some point we'll start to see some interest deductions. And so this will all be fixed. And so I guess the message is that the market isn't really broken. It's just stuck, and it's stuck. There's some psychological reasons. Of course, there's affordability. But let me just say, the expectation that a house should sell in less than 40 days, that's a brand new expectation. That's an expectation born out of the pandemic, because prior to that, that wasn't a seller's expectations. I'm totally telling you, in the 90s and the 2000s and even the 2010s, if you sold your house in 4 or 5 months, you were super happy. But then the pandemic came and our expectation was you need to sell your house in 20 days or less. And so some of that we just need to curb our sellers' expectations. Let me quickly show you the article I'm quoting from. Here you can see records $700 billion worth of listings in the market, but sales are sluggish. Let me point one other thing out from this first thing here. See, unsold inventory is worth a record $698 billion. Well, that's absolutely true. But if we compare that to the last high here in 2019, well, houses are worth 40% more than they were back then. And so it didn't take a whole lot of inventory to beat that dollar number, meaning we're not comparing apples to apples. If we're going to compare apple to apples, we can compare how many units are listed compared to how many units are listed. But instead, we're comparing dollar amount, which isn't taking into account the 40% inflation we've seen in housing prices. But that's neither here nor there. I did a LinkedIn post on this today. I posted quite a few details on this article. I post frequently. If you like information like this, check out my socials, especially LinkedIn. I appreciate you giving me some of your time. I hope you're having a great day. I look forward to talking to you again soon. Thanks so much.